Ladies and gentlemen, good day and welcome to Godrej Agrovet Limited Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Probal Sen from ICICI Securities. Thank you, and over to you, sir.
Thank you, moderator. Good afternoon, everyone, and thank you for making the time to join us on this Godrej Agrovet's Q1 FY26 earnings conference call. From the company, we have with us members of the senior management, including Mr. Nadir Godrej, Chairman of the company, Mr. Balram S. Yadav, Managing Director, Mr. Sunil Kataria, the CEO and Managing Director Designate, Mr. S. Varadaraj, Chief Financial Officer, Mr. Burgess Godrej, Managing Director of Astec Life Sciences, and Mr. Arijit Mukherjee, Chief Operating Officer, Astec Life Sciences. As is usually the case, we would like to begin the call with brief opening remarks from the management, following which we'll have the forum open for an interactive Q&A session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the earnings presentation shared by the company with you earlier. I would like to now invite Mr. Nadir Godrej to make the initial remarks. Over to you, sir.
Good afternoon, everyone. I welcome you all to the Godrej Agrovet earnings call. Before I commence with the business update, I would like to take this opportunity to express our heartfelt appreciation and thank Balram for his extraordinary contributions to the company over the years. His unwavering commitment and visionary leadership, marked by wisdom and integrity, has left an indelible mark. I would like to wish him joy, good health, and fulfilling experiences. I would also like to take this opportunity to welcome Sunil Kataria, who will take over from Balram. Sunil has had a distinguished track record of driving growth and building high-performing teams, and his rich experience will bring immense value to the organization. I wish him all the very best. Now, I will comment on the business update for Q1 fiscal year 26. Godrej Agrovet Limited reported strong financial performance for Q1 fiscal year 26, with notable growth in revenues, profitability, and operational efficiencies. The growth in profitability was mainly driven by robust volumes and improved operational efficiencies in the vegetable oils business, supported by significant reduction in losses in Astec Life Sciences. The company recorded consolidated revenue from operations of rupees 2,614 crore in Q1 fiscal year 26, as against 2,351 crore rupees in Q1 fiscal year 25, registering a growth of 11%. Profit before tax also improved from 151 crore rupees in Q1 fiscal year 25 to 188 crore in Q1 fiscal year 26. Coming to the key financial and business highlights of each of our business segments, in animal feed, while overall volume growth was a healthy 8%, segment revenue and underlying margins were flat due to lower realizations. Volume growth was recorded across all key categories, led by broiler feed at 13%, cattle feed at 11%, and layer feed at 4%. Our vegetable oil segment revenue and margins improved significantly in Q1 fiscal year 26 as compared to Q1 fiscal year 25 on the back of increased average realizations of crude palm oil and palm kernel oil, coupled with higher fresh fruit bunch arrivals, higher by 50% year-on-year. Oil extraction ratio also improved year-on-year. Standalone crop protection segment revenue grew marginally by 5% year-on-year on the back of an increase in volumes in the in-house category. Lower net realizations in respect of in-house and in-licensing categories on account of channel mix and higher discounts resulted in the segment margins being marginally lower, but in line with our expectations. I am pleased to announce the launch of a new in-licensed maize herbicide introduced under the brand name Ashitaka in July 2025. Astec LifeSciences revenue improved by 31% year-on-year, primarily on account of higher volumes in both the enterprise and CDMO categories. EBITDA also improved year-on-year, primarily on account of higher volumes and lower raw material costs in the enterprise category, coupled with better capacity utilization. In Q1 FY26, our dairy segment revenues remained flat as compared to Q1 FY25, while milk volumes increased by 2% year-on-year. Unseasonal rains in the months of April-May temporarily impacted the sale of value-added products, VAP. EBITDA margins declined primarily due to increase in milk procurement prices, compression of markets in key value-added products due to early rains, and increased spends in advertising and marketing. The poultry and processed food segment recorded a decline in revenue and margins, primarily due to lower volumes and muted realizations in the live bird category, as we continue to focus on growing the branded business and reduce our exposure to the live bird category. GAVL's joint venture in Bangladesh, ACI Godrej, recorded revenue decline of 20% year-on-year in Q1 FY26 due to volume contraction across categories in the backdrop of a challenging political and economic environment. That concludes our business and financial performance update for the quarter. With this, I close my opening remarks. We will now be happy to answer your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may please press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. The first question is from the line of Abhijit Akela from Kotak Securities. Please go ahead.
Yeah, good afternoon and thank you so much for taking my questions. First of all, if it's possible to share any update on your outlook for fiscal 26. You had already shared with us last quarter that you expected 16 to 18% top line growth at GAVL, and various business-wise commentary as well. But if it's possible, in light of the performance of the quarter gone by and pricing pressure in some of the segments, if it's possible to update your outlook, that would be very helpful.
So after the first quarter, I think we still maintain the top line growth to be in early teens. And once we come to questions about different segments, we will talk about different segments also. But we maintain the same expectation for profit. And you must have seen that we have grown profit in Q1 by 25% over Q1 last year.
All right, sir. Thank you. Just on the crop protection business, if I may drill in one level deeper, on the new product, Ashitaka, if it's possible to share any outlook or expectations you might have regarding market potential for the product. And we had a target of growing revenues in that domestic business by 30% this year. Yet there is, competition and pricing pressure, I guess, in some of our key products. So what would be the key drivers for this kind of growth in the upcoming year?
So I must brief you that we did not have a very good quarter as far as agri products are concerned. And we expect that in Q2, since the Pina season has not gone well because of erratic rainfall, we might have some returns in Q2, which will be more than what we had provisioned for. It is only towards the end of August that we come to know, because till about middle of August, some season continues in different parts of the country. So by the end of August, we will know that what would be the actual return. But definitely we know that it will be much more than what we had provisioned for. Having said that, I must also tell you that the rainfall has been extremely good, and we have several products to be sold in our Rabi season. So we expect to catch up in Rabi in some of the products, but the kind of setback we have had in Pina cannot be covered by the other products we have. So let us see. I think definitely we will maintain a EBIT margin of close to 28 to 30%. That is what the indication we had given on steady state, because last year 40+% was an outlier. But top line growth we will be only able to come to know once the season is fully over. Having since you have asked about Ashitaka, I must tell you, yes, that is a very, very important product for us going forward. Theoretical potential of Ashitaka is about 200 crores, and we believe that we will get there in 3-4 years. But I must tell you, I must marry Ashitaka story with our corn story in the country. Now, corn acreages are going up, this year also till now, about 7% acreage in corn has gone up. Prices of corn are very high. It is a very profitable crop for our farmers, largely because of the ethanol story being played out. We strongly believe similar growth will be maintained in Rabi also. So Ashitaka potential may be much higher than our expectation in time to come, because we will produce about 37-38 million tons of corn this year, and we will be just hand to mouth, because poultry demand as well as ethanol demand is rising. So my sense is that in 2 to 3 years time we have to get to about 45 million tons of corn, which will mean that from something like 9.5 million hectares, we will have to go to 11 million hectares area under corn. So this is the good opportunity for Ashitaka. So we believe that our expectations from Ashitaka will be revised further upwards as the time passes. Regarding the pricing pressure, definitely pricing pressure has come because other competitors for the same products have come. Gracia is also shared by the principal with other companies. So definitely when competition grows, we cannot enjoy same level of margins. So idea is to expand to different crops. We have already got labels for several other vegetable crops, not only chili. So we believe horizontal expansion in terms of crops and area will definitely maintain Gracia volumes and profitability.
Thank you, sir. That is helpful. And on Aztec Life Sciences, if it's possible to share your updated expectations in terms of how you're seeing the industry scenario, plus any impact at all of these US tariffs that have been recently announced.
So Aztec is expected to report EBITDA break-even for this financial year. The volumes of the enterprise products have improved over the last 2 years, but there's been no major improvement observed in the price realization. The gross margins in enterprise segment are positive in the current quarter, which is a good sign, and it's a sign of recovery. And I also think raw material prices reducing, which is another positive sign. Regarding impact of US tariffs, there is a lot of uncertainty prevailing in terms of what the final tariff rates will be. We understand that trade negotiations are still in progress. We'll be able to comment once we get further updates. But thankfully, our exposure to the US in the form of exports is only ranges from about 7 to 10% of our total sales. Our major customers are in South Korea and Japan.
Thank you. And just one last thing for me before I get back in the queue. Just within the vegetable oil segment, what would the percentage share of value-added products be within total revenues and also profits, if it's possible to break those out?
So today, 80% of our sales is now value added, which is mostly choline, stearin, and PFAD. Because I must also tell you that you need to understand one thing about this business. Today, there is actually government dropped the import duty on CPO by 10%. So earlier the differential between refined and CPO was 8.75%, which went to about 18% plus. That suddenly refinery has become profitable, and that is why we are passing all our CPO through our refinery. However, if you take the last year's case, it was not the case. Last year, the refining margins were either very low or negative. So we disposed of most of the oil as CPO because our focus is to maximize profit. So this will be the I would say entrepreneurial decisions we will have to take month on month, quarter on quarter in this particular business. The incremental profit of the refinery segment is about 1 to 1.5 crores, depending on percent, 1 to 1.5% depending on prices. To add to our value-added story, we are in the process of setting up a PKO refinery, which will come into production in Q3. And in Q4, we will also be starting interesterification and hydrogenation, which will also enable us to get into further value-added products, which will like bakery fats, shortenings, etc. So I think we have started this journey, and our strategy is to convert more and more of our crude palm oil and palm kernel oil into value-added products.
Thanks a lot, sir. I'll get back in the queue for any more. All the best.
Thank you, sir. Ladies and gentlemen, to ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. The next question is from the line of Aegis Lakhani from Unifi AMC. Please go ahead.
Yeah, hi team. Balram sir, firstly on animal feed, could you just explain that comment that is there in the PPT which states that you all have had a higher utilization of the vendor invoice discounting, which resulted in higher input costs and lower finance costs. So could you please explain that?
So in the past, this is Godrej. In the past as well, we have sort of from time to time taken benefit of the vendor invoice discounting program by taking extended credit on our purchases. Now what it does is that whenever you take extended credit on our purchases, that cost goes and sits as part of the material cost, thereby impacting the segment results. Okay, and that is the reason why we have sort of talked about the underlying segment margins as well. Trust this clarifies the question.
Okay. Okay. Sir, the second question is on palm oil. Could you first call out what is the quantum of FFB bunches that we got in this quarter?
Sure. Yeah, so FFB is improvement is 52% over last year, and Q1 FY26 we got 178,000 tons. Q1 FY25 we got about 117,000 tons, so which is a 52% increase. I must say that this is an extraordinary quarter as far as oil palm business is concerned, because we have never seen such a good FFB arrival in the first quarter. It is largely because of early rains. I must also say that we are seeing extremely good oil extraction ratios in the first quarter, which we had never seen in past. In quarter one of FY26, we had 18.37% oil extraction ratio as compared to quarter one of FY25, which is 17.98%. So, but I must tell you that these trees are trees. They may produce early, they may produce late, but they are likely to produce the same quantity with normal productivity increase, which happens with age and management. So my sense is that this year we are expecting about 15 to 18% increase in FFB arrivals over last year.
Understood. And sir, given that, the first quarter was, much better in terms of procurement, does that mean that the second quarter will be affected for any reason? Because second quarter is seasonally the best quarter for us.
Yeah, so today we definitely see that FFB arrivals continue to be at last year or slightly more than last year level. But it's early to judge because there was a lot of rain in our areas in July. We feel that Q2 will definitely be the top quarter the way it has been historically. I am very glad to report that OER continues to be all-time high, coupled with extremely good prices because of several reasons. So we believe that from profitability point of view, quarter two will also be extremely good.
Sir, I want to ask another question on OER. So sir, because the OER in this bunch of arrivals is on the higher side, is it a fair assumption to make that for the balance part of the year also the OER expectations on the higher side of 19.8 versus the 8?
It is a fair assumption because that is the pattern we see every day, that our lowest OER is in the monsoon season when the bunches are wet. And after that, once monsoon reduces and the temperatures become slightly more benign, the oil content increases. For example, I must tell you Q4 in FY25, the OER was 19.66%. So as compared to that, Q1 is lower, 18.37%. But I must say that this year we are going to have an extremely good year in OER. And OER is direct injection into our profitability.
That's sir. Sir, thirdly, could you tell me about crop protection? Actually, what went wrong in the crop protection this year for us? Because the season's been fairly good. So was it to do with the channel, the product? Could you just speak a little more on the segment?
So I'm saying that we were better off in terms of market information. Most of our digital programs had already been initiated and had reached certain levels of maturity in tracking of our stocks, etc. And we had improved our sales and distribution. Everything, according to me, was right, except this season is very unique. So the rain started early. There were a lot of rains. And the sowing also started. And most of the sowing was completed about 1 week or 10 days before the time. Now, our FINA products, particularly Hitweed Max, is to be sprayed at 2-leaf level. Now, that is the level where you need certain amount of irrigation for this herbicide to be effective. Unfortunately, for about 3 weeks, there was total dry period in the areas of Vidarbha, Marathwada and several parts of the country where cotton is grown. You must have also heard about reports that just because of a dry period, there has been resowing in several areas as far as cotton is concerned. And not only us, all the companies which have been in the early stage herbicides for cotton, they have had huge amount of unsold material in the market. Having said that, I must say that this is one of the issues with this business, and that is why efforts are on to balance the portfolio, improve. Today we are very skewed towards Kharif, but most of the products in pipeline are also focused at Rabi crops. Rabi is increasing in salience over the past years as far as this business is concerned, and we believe that Rabi will be equally balanced in 2 years once the new molecules which are in the different stages of registration are launched.
I'd like to add that, in as regards Hitweed and Hitweed Max, this being we are in the midst of the season, and as the season progresses, we will get more and more clarity in terms of what is happening in terms of the inventory in the market, etc. Yeah.
Understood. But sir, this is, I mean, in the earlier part of the call, you said that maybe you may have to take, some returns in 2Q, and this will be more than provided for. This is a little conflicting to what you mentioned earlier. So could you please clarify?
So we still maintain that we will have returns. It is the tail end of the season. But the only thing is that last year also we had seen that surprisingly our liquidation was much more than what we expected. So that is why we are a little cautious. But I still reiterate that the returns will be more than expected. How much more is something which we will only be able to tell towards the end of August. You must also remember one more statement I made, which was resowing of cotton. So even the cotton season in some of the areas is delayed. So, but it is so vast, and the kind of information which is needed to be able to predict all this is not there. So that is why it is very difficult to take a informed guess on what percentage of returns, etc. at this time of the year.
Understood, sir. And sir, Gracia, you said that Nissan has given it to, other competitors. So could you explain? I thought that the in-licensed products, the arrangement was such where they used our distribution network, and that was mostly exclusive to us. So for what period do you have the exclusivity? When does it then get open to competition? And given that Gracia was very important in the scheme of things, could you call out what was the size of Gracia in the crop protection business, and how much do you think that will get diluted by incrementally?
Ladies and gentlemen, the line for the management have been connected. Thank you, and over to you, sir.
Sorry, we got disconnected. Can you please repeat the last question, because we were not able to hear the last question.
Sir, my question was that Balram sir made a point that Gracia has now been shared by, to other competitors by Nissan. So I just wanted to understand the kind of arrangement that you have with Nissan. Is it that these products are exclusive to you for a certain duration? Is that is it product by product because they're leveraging of our distribution network? So some semantics around how the relationship works. And secondly, could you call out what is the size of Gracia in our crop protection business, because it's a material product for us, and incrementally how much runoff do we see from that product?
So, salience of Gracia in business. So, okay. So as far as the in-licensing is concerned, no Japanese company nowadays gives exclusivity to anybody. The only difference which has happened in last year is that earlier the other company used to be given material through us. Now it has been made direct, but definitely that was part of the deal, that eventually they will service at least 2 partners in the country directly. Rashinban, we have exclusivity for some time, I think 2 years or 3 years. So exclusivity for 2 years in Rashinban, I think 3 years in Rashinban. But we'll revert on that, but we have some exclusivity there. Even Ashitaka, which is another molecule from another Japanese company, which we are launching today in different brand name, it is with one more partner. The salience of Gracia last year in the Q1 was 18%. This year Q1 is about 5%.
Okay. And so could you call out Gracia for the full year in FY25 and how you expect it to run off in 26?
Full year. FY25 full year was 18%. 18%. FY24 was 29%.
Last year Q1 was also
5%. No, sorry, but last year Q1, this year Q1 same at 5%. And now we have more labels, so my sense is that if the season is good, the salience will also be beyond 18% according to us. And it is the need also because since Hitweed Max have not performed, in case we have to recover lost ground, it has to be from the products like Rashinman, Gracia, Ashitaka, Bounty, Combine, Double. All these products will have to be sold in higher quantities than we have budgeted for.
Understood. And so finally on dairy, just could you call out what has been the VAP share for the quarter? We were expecting our EBITDA margins to be in that 5-6% range and building on that incrementally. So what's happened really? Because something seems to be amiss.
Yeah, so I must also tell you that we are glad to say that our salience continues to be at 42%, which was at the last year level, considering there was a lot of unseasonal early rains, which definitely hurt the drinks business in flavored drinks business in this segment. The second thing is that we have started investing on brands. Our ad spends in the first quarter are 5 crores higher than the last year, and I think that those results will be seen in future because that is the strategy. Lastly, I must tell you that our EBITDA margins, including working media, close to 6.5 to 7%, and we will be able to maintain that easily, and probably once our value-added product post advertising, the salience goes up, we are aiming at another percentage or 1.5% improvement in EBITDA plus working media margins in time to come. So the entire effort of this business is now to increase rapidly the value-added products business, and we are budgeted much higher salience in the coming year, going up to 50% salience for value-added products in 2 years.
Understood. But sir, just to follow up, you're saying that even after the ad spends, you are likely to do 6 to 7% EBITDA for the full year FY26. Understood. And so finally, on chicken, on live birds, what is the proportion now in the business?
So let me just repeat. It is 6 to 7% including working media. EBITDA plus working media. Okay.
So basically 6 to 7% is including the media spend. So if I exclude the media spend, then EBITDA is expected to be reported. Okay, fine. Okay, I understood. And
5.5 to 6% you can take on the annual basis.
Okay. And so just for chicken, could you call what is live bird share?
So 15%. Yeah. So live bird share, as a strategy, we have started bringing down live birds significantly, and that is why the top line growth of this business is affected. But we are glad to say that live bird share is 15% of the total sales. 85% is today are value-added products. Yummies and RGC.
Understood. So thank you and all the best.
Thank you, sir. Ladies and gentlemen, to ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. The next question is from the line of Aman Vora from Premium Capital. Please go ahead.
Hi, I would like to thank you guys for the opportunity to ask a few questions. My first question is about Astec Life Sciences. It's good to see an improvement in volumes, but does our outlook for FY26 remain the same? And how do we plan to use the proceeds from the recent rights issue?
Yeah.
So, this is Varadaraj. As far as the utilization of the recent rights issue is concerned, the same is being used to repay all our debts which were there in the books, and that is what the primary purpose of the rights issue has been. As regards the other questions,
Yes.
will work.
Yes.
Yeah.
So we should report EBITDA break-even this financial year, which is a significant improvement over last financial year, and we are aiming for a turnover of 500 crores.
All right. Thanks a lot. My next question is in regards to the Astec CDMO business. which geography is currently showing the strongest traction in this CDMO business?
So the CDMO business is quite diversified across various geographies. We're targeting the major European innovators as well as the North American innovators, and the end product goes into multiple geographies. So all are important. We have strong existing relationships with Japanese and Korean companies. Now we're targeting more of the Western innovators.
Sure. That sounds great. And in regards to the corporate structure review, can you please update us on anything incremental on the strategic review of the corporate structure of the business to enhance shareholder value, something we discussed in the past?
So I think the step one was the major step where significant investment have been made. We own 100% of Godrej Foods, 100% of Creamline Dairy now. So the idea was that we just wanted to make the ownership very clean so that whatever portfolio decisions we need to take in future, we don't have to take anybody into confidence or seek permission from anybody. So I think this is the first significant step which was the material step, because in total we have invested close to 1250 crores in last 6 months in buying out partners in these two businesses. So I am saying that keep glued on, more to follow.
The line for the current participant is disconnected. The next question is from the line of Siddharth Gadekar from Equirus. Please go ahead.
Hi, sir. So first on the CDMO business, last year we did roughly around 204 crore revenues. What is the target for this year, and where do we see us going into FY27 and 28 on the CDMO business?
So we're aiming for a revenue of over 300 crore in CDMO business, CDMO and new products, and that should be about 65% of our total sales.
And for beyond 26, any guidance on this business?
Beyond 26. I think this depends on the pipeline, and we will keep you posted as it matures, because the gestation period is where it is. So we will look to grow more than 30% every year. Let's see where that goes as the base increases.
We do have 10 molecules in our pipeline. It should be commercialized after FY27.
Secondly, in terms of the enterprise business, we were talking about doing some refitting to the plants and trying to diversify away from these legacy products. Where are we on that, or that is still a status quo?
Put up new. Yeah.
So now all the new projects which will be commercialized is based on the old plant only. So all the refitting, once we told that there are new projects on pipeline, whenever the commercialization starts, the refitting will be done.
In fact, if you're looking at the website, you will get information about some of the old plants, the new plants which have come up in the last 2-3 years. That's been the capex which has been mentioned earlier. And it is those plants which will be used for the new CDMO products.
And most of our plants are multi-purpose plants. So it can be used for a little bit of refitting. It can adjust to any products.
All right, sir. Got it. Thank you.
Thank you, sir. The next question is from the line of Rinki Shah from the Boring AMC. Please go ahead.
Hi, team. Just wanted to understand, we're guiding for break-even in Aztec Life Science for FY26, but we have a significant share coming from CDMO, 65%. So, at what kind of spreads are we seeing the triazole business? Like, in terms of, if not, the amount, but like direction, are we seeing any improvement in the triazole spreads throughout the year? And if we are not, looking at that, and if we see supply not moving, so are we going to probably take a call on the triazole business?
So we expect the triazole business to continue. It is an important cash flow generator for the business. So we are going to put our efforts into growing sales on that. We're already seeing improvements in gross margins for the business, improvements in raw material prices, which are coming down. And we're putting a lot of efforts on growing sales in these businesses in key geographies. And we also want to use triazole as a platform for the CDMO business to do CDMO based on triazoles and similar chemistries. So that will continue to be important for us.
Got it. But sir, in triazole, if you're looking to do CDMO in triazole, we don't have many new molecules apart from, there's only one which is launched by Corteva in 2024, and the last one was efentriconazole in 2019. So the scope for doing CDMO work using triazole as a platform seems to be limited.
So there is scope for that. We see other companies doing that on exclusive contracts for triazoles, and metconazole we consider, in the new enterprise products in CDMO category. So we're happy to, aim for exclusivity with anyone who wants that. Additionally, there are pharmaceutical intermediates that are in the triazole class, so that is something that we can look into as well.
All right, sir. That's all from my end.
Thank you, sir. The next, ladies and gentlemen, to ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. The next question is from the line of Pawan from Nayan M. Wala Securities. Please go ahead.
Hi. Thank you for the opportunity. I'm audible, sir?
Yeah.
So my question was on the oil business. So what was the FFB arrival in our FY25 for full year and the extraction ratio of the?
We'll give it to you in a minute.
Yeah. And what we expect in the extraction ratio for FY26?
So FFB arrival in FY25 was 536,000 tons. Yeah. Oil extraction ratio was 19%.
And what is expectation for FY26 in oil extraction, as we have given a 18% rise in FFB arrival?
We have already grown in Q1 by 50%, but overall we will grow between 15 to 18%, and OER will be better than last year. That is what our expectation is.
And in terms of realization, considering the import duty drop by the government, what we expect to the realization?
So, as I already said that we have shifted to refining where there is no drop in import duty. And I've already conveyed that we will take the calls whether to sell CPO or to sell refined oil depending on how the refining margins are. We have that flexibility.
Okay. And in terms of crop protection standalone, what do we expect in top line growth?
Top line growth we are expecting about, as of now, when things particularly in hitweed and hitweed products did not look to be look very encouraging, but we have several products which will be sold in next 6-7 months.
Hello.
So, hello.
Sorry, I couldn't hear you. Your expectation for.
What we are saying is that we are still assessing how this Pina season or hitweed bag season is going. I think the best assessment will be made sometime after 3-4 weeks once we know what is the situation of current stocks in the market, etc. So I would not hazard a guess right now.
Okay. Thank you. That's all from us.
Thank you, sir. As there are no further questions from the participants, I now hand the conference over to management for closing comments.
Thank you. I hope we have been able to answer all your questions. If you have any further questions or would like to know more about the company, we would be happy to be of assistance. Thank you once again for taking the time to join us on this call.
Thank you, sir. On behalf of Godrej Agrovet Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.